Life insurance exam vocabulary, riders, options, provisions. Question 1. Which rider waives life insurance premiums if the insured becomes totally disabled? Waiver of premium, return of premium, settlement fixed period, dividend reduce premium. The waiver of premium keeps the policy active during periods of total disability without payment. Question 2. Which rider waives premiums on a juvenile policy if the adult paying the premiums dies or is disabled? Dividend accumulated interest, return of premium, settlement fixed amount, payor benefit. The payor benefit protects the child's coverage until they reach a specified age, usually 21. Question 3. Which rider pays a portion of the death benefit early if the insured is terminally ill? Accelerated death benefit, payor benefit, dividend cash, cash surrender value. This provides living benefits for medical or end-of-life care, reducing the final death benefit. Question 4. Which rider pays double the face amount if death is caused by an accident? Add-ND rider, child rider, guaranteed insurability, dividend cash. The accidental death and dismemberment rider provides additional funds for accidental death or limb loss. Question 5. Which rider allows the insured to buy more coverage at specific ages without a medical exam? Dividend reduce premium, cash surrender value, guaranteed insurability, payor benefit. This guarantees future insurability regardless of health changes, usually at specific ages or life events. Question 6. Which rider pays the death benefit plus all premiums paid if the insured dies? Spouse rider, waiver of premium, accelerated death benefit, return of premium. This is typically an increasing term rider that returns the total premiums paid upon death. Question 7. Which rider adds temporary coverage to a permanent life insurance policy? Accelerated death benefit, term rider, spouse rider, guaranteed insurability. A term rider increases the death benefit for a specified period at a lower cost than permanent insurance. Question 8. Which rider provides temporary life insurance on the primary insured's partner? Extended term, guaranteed insurability, child rider, spouse rider. A spouse rider adds term insurance coverage for the spouse onto the primary insured's base policy. Question 9. Which rider covers all current and future offspring of the insured for one flat premium? Cash surrender value, settlement fixed period, child rider, guaranteed insurability. A child term rider covers all children and allows conversion to permanent policies later. Question 10. Which non-forfeiture option provides the policy owner with a check for the policy's equity? Cash surrender value, dividend cash, waiver of premium, guaranteed insurability. Surrendering the policy for cash terminates the coverage permanently. Question 11. Which non-forfeiture option uses the cash value to buy a smaller, fully paid permanent policy? Return of premium, waiver of premium, child rider, reduced paid up. This option reduces the face amount but keeps the policy active for life with no more premiums. Question 12. Which non-forfeiture option uses cash value to buy term insurance for the full face amount? Extended term, add-ND rider, settlement life income, accelerated death benefit. Extended term provides the highest death benefit but only for a temporary period. It is often the default option. Question 13. Which dividend option provides the policy owner with a non-taxable check from the insurer? Dividend paid up additions, dividend cash, add-ND rider, settlement life income. The cash option directly distributes the dividend out to the policy owner. Question 14. Which dividend option applies the dividend to lower the next year's premium payment? Cash surrender value, settlement life income, dividend paid up additions, dividend reduce premium. This decreases the policy owner's out-of-pocket cost for maintaining the policy. Question 15. Which dividend option leaves the dividend with the insurer to earn taxable interest? Dividend accumulated interest, dividend cash, dividend reduce premium. Add and rider. The dividends remain in a separate account earning interest, which is taxable as income. Question 16. Which dividend option uses the dividend to buy small amounts of additional permanent life insurance? Reduced paid up, settlement fixed amount, dividend paid up additions, accelerated death benefit. This option gradually increases the total death benefit in cash value without further premiums. Question 17. What is the default settlement option where the beneficiary receives the entire death benefit at once, tax-free? Settlement lump sum, child rider, settlement fixed period, reduced paid up. The lump sum option is the most common and pays the principal entirely income tax-free. Question 18. Which settlement option guarantees the beneficiary a steady income for the rest of their life? Dividend accumulated interest, dividend reduce premium, settlement lump sum, settlement life income. This converts the death benefit into an annuity payout, protecting against outliving the funds. Question 19. Which settlement option distributes the death benefit over a specific number of years chosen by the beneficiary? Term rider, settlement life income, settlement fixed period, dividend reduce premium. The fixed period option guarantees payments for a set time, adjusting the payment amount accordingly. Question 20. Which settlement option pays a specific dollar amount until the principal and interest are exhausted? Reduced paid up, settlement fixed amount, dividend accumulated interest, dividend cash. The fixed amount option sets the payment size, and the duration depends on the remaining funds.